Hello and welcome back to News Fatafat. Over the next 30 minutes, we'll tell you some of the stocks that are buzzing in. We'll get you what essentially is happening into the markets, as well as which are the stocks in focus. Of course, result season is now behind. We have the expiry also now behind for the month of August. So that's something which, of course, the street has already taken a note of. Let's also look at some of the stocks that we would probably discuss through the course of the show. The first one is NMDC. They declared their numbers. It's not only their numbers, but also, what they essentially have announced in terms of hiving off of some of their assets. That's keeping the stock busy. 10.6% higher. I think the day's high was around 110. So that's what you're looking at. Sun Pharma continues to be in focus. It's the entire pharma pack that have taken a backseat after the results. During the time of results, they essentially did quite well, but right now, it's looking in slightly on the back burner. So that's the stock that we will discuss. Concor is another name that we will discuss. Again, it's an ET Now story that we've got. So that's what we will look at in terms of Concor that's coming in. So Concor is up around 2.5%. Future group of stock continues with the buzz that what's happening with the RIL takeover. Will Reliance Retail take over or not? Reports suggest that the deal could happen as soon as tomorrow. HCC, that is Hindustan Construction Company, is also in focus. Let's first address an important strategy note that's coming in. My colleague Vivek is now joining us with the Chriswood weekly newsletter. Vivek, it's an interesting greed and fear report that we are talking about, where he's talking about gold, oil, and how essentially oil-related stocks should do, probably because of this.
Well, in his latest and much-awaited weekly newsletter, Chriswood of Jefferies actually makes a case quite significantly. He speaks about how COVID has actually been on the declining trend. He also speaks about how economic activity is back in the US. He talks about how Japan surprisingly has emerged as a safe haven given the fact that it is a deflation environment that we are in currently. He also speaks about how you're talking about oil demand not falling as much as anticipation, and also he speaks about how he expects the rally in gold prices to continue in this particular scenario. What he's actually saying is that the very interesting point is oil demand has fallen by much less than predicted. In fact, he believes that the energy demand actually fell by just around 10 million barrels a day versus an expected decline of close to 20 to 30 million barrels a day. And also he's saying that the recovery in demand is something that has gained momentum ever since. He also speaks about Chinese customs data, and that he believes has seen a significant amount of increase as far as crude oil imports are concerned. It's up by almost 26% on a year-on-year basis. He believes that there is a significant amount of room as far as oil to rise with respect or with relative to gold prices. And however, what he's saying is that they would not recommend selling gold due to the strength of the long-term story. And very surprisingly, he believes that the best stock markets to hedge against sudden cyclical optimism and yield curve steepening is Japan. And that is why he's quite bullish as far as the Japanese stock markets are concerned.
Thanks, Vivek, so much for that. It's, of course, one of the most awaited newsletter when you talk about the markets and how essentially, investors globally take their calls based on his notes. Let's listen into an ET Now exclusive. We spoke to Godrej Properties earlier in the day about what's happening with the real estate pack, how things are catching up in the post-COVID world. Let's listen in.
But, I'd put it in two ways. One, I think there's no question the situation, both the current COVID pandemic, but also the overall weakness in the sector going into this, has made absolute sales more challenging for everyone in the sector, including us. So I think our numbers would be even higher were market conditions favorable. But I think there's no question that on a relative basis, which market share would indicate, this has advantaged the stronger developers with strong brand names, because in any case, I think customers for under construction real estate over the last few years have seen a lot of different things go wrong when buying homes, huge delays, in certain cases, developers going bankrupt before being able to deliver the home. So I think there was already a significant amount of conservatism coming into the buyer's mind on which set of developers they want to work with. And obviously, I think a situation like COVID, which has put many businesses under financial strain, and has clearly, I think, clarified to customers the even greater importance of only working with developers whose financial stability they are confident in. So there's no question that I think the leading players, including Godrej Properties, will significantly benefit from a consolidation perspective. That consolidation's already been playing out over the last 5 or 7 years quite significantly, but I do think this situation will ensure that process gathers further momentum.
Sure. You did face, as everyone did, challenges, in the beginning when the lockdown first hit with regards to construction, which put a spanner in the works in terms of completing things on time. As labor comes back to work, how are things looking now on ground?
So I think, it's been quite positive, the change. We actually were quite concerned in the first quarter because what we saw was actually that we managed to retain well over 60% of the labor on our side through the actual lockdown. And, we're able to, of course, make sure they stayed as comfortably as possible during that. But what happened after that was that everybody wanted to return to their homes to see their family, I think, after an event like this. So we saw that 60% number go down to below 30%. And that's been steadily coming up since June. And the most recent number is now north of 70%. So I think we're in a reasonably healthy zone. I think in another 3 or 4 months, we should certainly cross the pre-COVID labor strength. I think that said that, there will be a setback to construction schedules, particularly for the current financial year. So what's happened is that Q1 was almost a total write-off with, over 2 months of actual completely shut down sites. And since then, it's been gradually ramping up. But I would estimate at this stage, assuming we don't have any secondary major lockdowns and second waves and so on, that we've probably lost about 6 months in terms of construction schedule, which honestly is not the end of the world from an overall project schedule where we usually would have, a 3-year or so schedule. You can make up a lot of that in terms of commitments to customers. We usually have a buffer that is larger than 6 months, so we're quite hopeful that this should not impact delivery timelines to customers. But what it certainly will impact is kind of reported numbers for the financial year, because all of the accounting in real estate happens on a project completion basis. So the plans that we would have had at the beginning of the year in terms of the projects we intended to complete during the financial year, because we've lost sort of at least half of the financial year in terms of construction timelines, I think there will be a significant hit to both reported earnings and operating cash flows. But again, I think I see that as more of a temporary effect than something that we can make up in the next.
That was a 18 Hour exclusive about Godrej and Godrej Property and what's the way ahead. We at 18 Hour have also been celebrating the Mahindra Week. We've been getting you various companies of Mahindra and what essentially they have done or talking to them today. We spoke to Mahindra Holidays. Let's listen in what they told us about recovery in the sector and where do they see things standing in the post-COVID world.
So we are in talks with some players who would be interested to, at this point of time, exit hospitality. But, these talks do take time. And as far as we are concerned, we need to see how the resort or the property fits into our requirements. As you know, our requirements are different since we have a membership model. We have studio, 1-bedroom, 2-bedroom apartments. So we do look for rooms with hotels or properties with larger size rooms. So it is important for us to look at these considerations before we actually go ahead with the acquisition. So as we speak, there are talks going on. And I think we should look at the properties which give us the right brand experience to our members. So it doesn't matter that even if we are delayed by a couple of months, but I think when we do the acquisition, that will be the right acquisition for our members.
Mr. Singh, hi there, good morning. So it's fairly encouraging that even in these stressful times that you have managed to keep the business intact. And of course, that's owing to your unique business model as you described. So let's talk a little bit about the financials in terms of what your outlook is on the vacation ownership, revenues that you see, how you see the overall occupancy shaping up, going down the line in the second half, what exactly you're penciling in by way of your overall revenue projections as well?
Okay, I think, as you know, that our business model has multiple streams of income. So if I really look at our vacation ownership income, we have about 5,400 crores of deferred revenue. As you know, when we take in a new member, we are only recognizing 4% of the income upfront, and 96% of the income gets moved to the deferred revenue balance, and that accrues over a period of time, though we recognize costs upfront. And as a result of which, you saw there was a change when we moved into the new accounting standard 115, our revenues came down. But over a period of time, over the last 2 years, we are back on track, both in terms of the profits as well as revenue growth. So the vacation ownership income, we are very confident of maintaining the same trajectory that we have currently, which is about 8 to 10% income growth. If you really look at our annual fee income, which is a function of the member base that we have, that also has been growing approximately at about 8 to 10%. So we do expect that growth to continue. The third income, which is the resort income, that is where the variable is, because as we speak, the resorts are opening up, and we have opened approximately 27 resorts now. And we are intending to open more resorts as and when the travel restrictions get eased off. And as I mentioned earlier, wherever the travel restrictions are not there or lesser, we have seen very huge occupancies. So resort income will grow month on month as I see it going forward. And as we kick into these festive season, which will happen from October, November, December, which is a seasonal quarter for us, we do see even resort incomes going up. The other parts of the income, which is a bit of a financing income when members take in the membership fee, there is a built-in interest. That part will continue as usual. So I do see us being able to maintain our track record even in this year, both in terms of revenue as well as profits, if I were to compare it against the last year.
Okay. And what is the trend, being very entrenched in this space that you're seeing now in times of lockdown? Are there more, holidays that are appealing to people that are at a closer drive where they don't need to, use air or train transport? What are the new trends that you forecast or you see in the travel industry?
So I think the trends that we are observing, and let me start from the fact that the fundamental concern that we are hearing from people, and that's something that we took care of very early on, and it's a slightly broader perspective to the question that you've asked. I think the number one concern for people is safety and hygiene. And let me share with you that we have launched a program called Travel with Confidence, and I believe this is a program that we must launch even at a country level, because when people are looking to travel, their fundamental needs are, am I going to travel safe? And wherever I'm going to stay, am I safe? So talking about traveling with confidence, we have been able to create a partner ecosystem where we are able to offer not only COVID testing, because that's a requirement in some of the states, and also the travel insurance, COVID insurance, and sometimes people have the sanitization needs for their vehicles. And as you rightly pointed out, the drivable vacations are now taking off. 90% of the check-ins that are happening at our resorts, people have come into their own vehicle. So once they enter the resort, how do you give them that they are in a safe atmosphere? So what we have done is we have done three things under our Safe Stay program, which is a part of Travel with Confidence campaign. We have tied up with the number one hospital services provider, facility services provider, to learn the best in the disinfection.
Well, that was the management at Mahindra Holidays. On that note, we are taking a break. Coming back quickly, stay tuned.